following presentation is for educational purposes only. All of the symbols, trading ideas, and live trading are for demonstrational purposes and are not recommendations or trading advice. Past performance may not be indicative of future results. All of the information and opinions expressed by third-party guests are their own and are not necessarily those of NinjaTrader LLC. Trading futures involve substantial risk and may not be suitable for everyone, and trading futures can result in losses greater than the initial required margin. Traders should only trade futures with risk capital. Risk capital is money that you can afford to lose without jeopardizing your financial security or current lifestyle. You can find additional disclosure information on the NinjaTrader website.
So, you want to be a trader? Well, you should know you're not alone. Over the past several years, record numbers of people have set up their very own online trading accounts. There's never been an easier time or more inexpensive way for do-it-yourselfers to get started trading the financial markets.
Better futures start now with the NinjaTrader mobile app. With the power to customize how you trade on the go, you can quickly and easily place trades with a single swipe and view index, financial, energy, metal, crypto, and more futures markets, and access over 40 built-in indicators plus custom indicators, all from your phone. Stay up to date at all times by enabling notifications. Get started today at ninjatrader.com.
And welcome back to the continuous stream. I am your host of this segment. This is Tom Schneider, CMT with NinjaTrader. And this kind of is our Traders Workshop segment of the new continuous stream. And so being that it is Traders Workshop, where we do feature technical analysis and a lot of times we feature our NinjaTrader ecosystem partners. Today, we're really pleased to have to kick off this segment a previous guest. Now, this guest has been on the show before, had a great time talking about her indicators probably about a month ago. So I'm just going to welcome back Dr. Levy of E.G Indicators. She's the founder of E.G Indicators. So welcome back, Dr. Levy. Oh, my pleasure. And one thing that is for sure is when you mentioned AI being the way that you have improved your indicators, discovered your indicators, enhanced your indicators, that certainly perked up some more than just our ears here at NinjaTrader. So I think we're definitely very, very glad to have you back. Sure.
with a PhD in machine learning. And my research focused on utilizing deep learning and machine learning for anomaly detection. In this example, you can see that the domain was cybersecurity. So I focused on cybersecurity domain, but when thinking about it, cybersecurity challenges are similar to the challenges in trading. There are several entities we want to fingerprint. In trading, these can be the big institutions, for example. And I'll dive deep into it in a few minutes. Let's get back to NVIDIA. NVIDIA and AI. So what is AI? We can think of it as an entity that's able to learn just like humans. For example, we can take a set of labeled pictures, telling it, hey, this is a cat, and this is a dog, and this is a bird. So when it sees a new picture containing a new cat, it immediately recognizes it, classifies it as a cat. And this is called supervised learning, meaning we give the AI a set of classified examples, like you see here, and it learns it. And this is in contrast to unsupervised learning. There's a study called unsupervised learning, and an application, for instance, can be anomaly detection. And anomaly detection is a very important principle in trading. Anomaly detection involves identifying data points that don't conform to expected patterns. This can be useful for spotting unusual price movements or other market behaviors in trading. Market data is noisy and can be influenced by many factors. Anomaly detection can help traders distinguish real trading opportunities from random fluctuations. And I want to show an example of liquidity grabs. To do so, let me start with a quick overview of the E.G trigger point. So the E.G trigger points are significant price levels calculated based on historical and correlated market data. They are generated daily and delivered to day traders before the market opens, meaning it's a leading indicator. The E.G trigger point is a leading indicator, not lagging. And these levels are calculated by an AI engine aiming to maximize the likelihood for the market to react when it reaches them and minimize the risk of liquidity grabs or volatility. So the trigger points are spatial support and resistance levels calculated daily by our AI engine running on a dedicated server. It was developed for futures day traders who consider support levels buying opportunities and resistance levels selling opportunities. And we support instruments like ES, NQ, RTY, YM, GC, and CL. And these levels are delivered daily to our customers after the AI engine computes them based on historical data every early morning to let the traders ready for the next trading day. So the red levels are potential short opportunities, and the green levels are long opportunities. And when these levels are delivered to our customers, the market's price, moves between the dashed levels here, R0, support 0, and res 0. And this is the delivery time. This picture is to mention that the levels, when they are calculated by our AI engine, the market moves between them. And our AI algorithm utilizes historical and correlated data for calculating the trigger point levels, aiming to provide maximum likelihood for the market to react when reaching them, while minimizing the risk of liquidity grab. Anomaly detection is incredibly important in trading. It can minimize risks, improve decision-making, and enhance overall trade performance. So speaking about liquidity grabs, in my YouTube channel, I show how it looks in terms of anomaly detection. So the market is volatile. Let's zoom in here. So in this example, the E.G trigger point support levels produce good long opportunities. And assuming we place a pending order here, buy pending order on this level, this is the risk should be taken. So the AI mission is providing levels that are giving trade opportunities on one hand, while minimizing the risk on the other hand. So again, the AI algorithm aims at presenting levels with maximum likelihood for the market to react when it reaches these levels, while minimizing the risk of liquidity grab. And here are a few examples. This is an example for NASDAQ, NQ, ES, RTY, Russell 2000. And here is an example of a trade taken on a PA account, prop firm, performance account. And we have a slogan in E.G indicators. E.G customers are the only ones getting the E.G trigger points 10 hours before the market reaches them, meaning it's a leading indicator. And one thing to remember, and it relates to AI as well, AI algorithms are statistical algorithms, and trading is all about statistics. There's never 100%. So speaking about liquidity grabs, anomaly detection, which is an AI mission, and E.G trigger point, which is an algorithm based on AI technology, now I'd like to show an example. This is a very, very, very common example. I used to catch these scenarios almost on a daily basis. I show our students that the market repeats, that the history repeats. So here we attach the trigger point to the NinjaTrader chart. So we see the levels. Now we move to 1 minute time frame. And here is the support level. Support level is a long opportunity. And what you see here is exactly the liquidity grabs on a significant price level. It's anomalous. And this is how it looks when the market is recovering from this liquidity grab. And the support level, the trigger point, is getting respected again. This is a very, very common scenario, almost on a weekly basis. On every instrument, we see this phenomenon where liquidity grab, and then the market recovers, and then the level is getting respected again. And what you see here is another option of trading by utilizing prior day's levels for profit targets. So in this example, we enter on a support level, long, and we place the profit targets on prior days levels. Because statistically, we observe that the market tends to react and to reach them as well. So these are potential prices, good potential prices to set as profit target. And there was a news here. That's why you see the anomalous green candle here. And the market reached the resistance, trigger point resistance levels, placing sell pending orders in this example. And because the levels are very closed, one best practice is to scalp between the levels. So the purpose of this video is showing a common scenario of liquidity grab where the market recovers this and then the levels are getting respected again. And when managing the position properly, the day can be end green statistically.
So Dr. Levy, I have a quick question for you. I understand that these levels are generated for intraday trading.
Correct.
It's very obvious, right? They're sent to you 10 hours before you get them before your trading day, and you apply them to your intraday charts. Have you developed them for longer term periods? And the reason why I ask that is it would seem to me data is data, right? It's just a different time frame. And there seems to me there would be some value in having a longer term view that, again, might be updated every day. But as a trader, I might want to know what the upper limit is in terms of a longer term. Are we nearing an EG trigger point on a longer term period? Because that might reinforce the intraday trigger points, or it might inform my bias of the day and help me with trades. Have you thought about doing that, or do you do that already? Can you apply them to daily charts?
Yeah, the time frame can be larger than daily.
Oh, great.
As more we get to higher resistance or lower support prices, they are more suitable for higher time frame, because the dashed levels, sub-zero and res-zero, are the closest to the market, so they have higher probability for the market to break during the current day. Right. And then when the market reaches support 1 or support 2 or resistance 1, resistance 2, there's a higher probability for these levels to be the low or the high of the day, or maybe of the week or of the month.
Right. Okay. Thank you for that.
You're welcome. And to summarize this presentation, the AI is a good technology for anomaly detection, and anomaly detection is essential for trading.
So, when you talk about anomaly detection, we're talking about kind of not just price. Is there other things that go into it, or is it mostly with price? You're detecting it on the price.
The price is one feature.
Okay.
You know, machine learning or AI are based on features that they're getting in to give us an output. So price is one feature. Another features can be volatility, can be volume, And sometimes we transform this raw data into another representation, mathematical representation, to help the AI algorithm process it in a proper way.
Okay.
So the features for machine learning algorithms in trading can be many.
Right.
And what it needs historical data. It needs some sort of feature engineering, not only getting the raw data, but also some kind of transformed data to help the AI processing and giving us meaningful insights as day traders.
So that's interesting because my background is with transforming data with the use of studies, right? With the use of traditional momentum studies, traditional volatility studies. So you really have a palette that can help inform the AI in many different ways when you open it up to that kind of toolbox, if you will.
Yeah.
Oh, that's
And
great.
this is an unsupervised algorithm, meaning it we do not provide the algorithm with examples and labels. This is a cat, this is a dog, this is a bird. We provide it with data or transformed data when it learns the distribution and detects out of distribution behavior. And according to that, it can point to price levels that the algorithm believes to be the point of interest for the current trading day. This is exactly the optimization process done by the AI algorithm. The optimization is finding trade opportunities on one hand and minimizing the risk from volatility or liquidity grabs. That's the main challenge. And it does this not by providing it with examples and labels, but with the data. It learns the normal behavior, and then it detects the abnormal behavior and the prices where the abnormal behavior was detected on.
So it's interesting because I would think maybe you would say if the price is abnormal behavior, right? It's an extreme spike, it's an extreme low, spike either way, right? Spike up or down. What are the characteristics in all these other measures and which ones seem to be consistent? But you're saying it's kind of the other way. Like when these things are extreme, here are the reactions in price. So um, here are the ones that might provide the most reaction or the extreme reaction. And based on the measures of, let's say, volatility as an example, I'm sure that's not the only thing. This is where we expect that price to be. And that's how you come to those levels. And I'm not trying to diminish it. It's really an extensive thing, right? It's a really huge process. So that's
Yeah.
interesting. At some point, the qualification really it isn't there, right? I mean, you're not telling it, oh, this is good, this is bad. You're just saying,
Yeah.
tell us what is.
I'm telling it this is normal with some errors in the data, then identify yourself what's abnormal and
Mhm.
point to the price levels that might be the current day's point of interest and do it optimally, meaning
Right.
provide the trade opportunity, but minimize the risk of liquidity grabs.
So, and did you start in the cybersecurity space, or is that
Yeah.
what? So, what's interesting about that for me is when I talk to um, people whose kids are going to college, right? They're talking about what fields to go into that have the most promise or have the most interest right now. Cybersecurity is like right there at the top, right? That's the biggest concern. So you took those applications in cybersecurity and you put them in the markets. I just think that's really interesting because to me that's like where the smart people are going to college for now is cybersecurity, and you're bringing it to the market.
Correct. Cybersecurity is a domain, and AI is a technology. And AI technology can be applied to different domains.
Mm-hmm.
And trading is another domain. During the PhD studies, the students are expected to be able to generalize, meaning at this level of the PhD studies, we do not really care about the domain. We more care about the algorithm and the mathematical representation of the data. So I can tell you that sometimes we take an algorithm from the cybersecurity domain and quite easily transform it to the trading domain. The basics are common.
So, that's interesting because you're coming from the cybersecurity space, and when I was at Bloomberg, I'll just talk about the analytics we were doing. We looked at it's just different data. Our comment was it's just different data. You're saying domain data, same thing.
Right. The
And
same data, but different data, but the same mission, and not
exactly.
detecting anomalies.
Right, exactly. So why I bring that up is because uh, you know, people who are focused on an area like finance, like trading, and they're maybe new to it, right? And wow, this is trading, this is a big deal. They see what they see in TV and the movies, and they might read books, and it's a reality. And for you, and to some extent, my experience, it's these techniques these techniques in the trading world are applied to other spaces, right? It's analysis of data. You want to find the best, the most extreme, the most away from the normal, right? The abnormal, the what's unusual. That unusual means opportunity, not just in trading, right? But in a lot of fields. So for me, it was
Correct.
sports. Um, we looked at a baseball team as a portfolio and a player as a stock, and you could go down that rabbit hole, but it's just trying to find those anomalies. It's in
Correct.
pretty much, I would say, if you're in the airline industry, you want to find anomalies in the structure of the airplane. If you're in sports, if you're in cybersecurity,
Correct.
trading is what we're focused on, though. So it's great that you brought it to trading.
Correct. The differences between those fields are the feature engineering, because in cybersecurity, there's no price, there's no volume, but there might be another features that can be reduced to volume and price. It's complicated,
Right.
but we are giving lessons.
Oh,
Yeah,
I'm sure you're the one to know about that. That it's kind of, we'll take your word for that. But yeah, I mean, it could be the frequency of pinging a server, right, to see if it's vulnerable, is volume.
wow, Tom, you have a big knowledge.
Oh, oh, not from experience, just thinking about it. But so that's really interesting. And what we like as traders is we like to have ideas about where the market can go, and because we're placing trades, it's not just one level. We talk about that all the time. When we talk about a level, it's not always about just that number. It's about that area. And I think with the EG indicators, the trigger points, you give that, right? You give here might be your long opportunity, but here's your stop underneath that, because there always is that, nothing's 100%. We're not saying it's just going to stop at this level and you want to buy
Correct.
there. You could, statistically, it might be a good place, but there is that slight chance it goes. That's why we give you a level for stop. So I really like that, because we know nothing's 100%. We want to come back and do this tomorrow, so we want to put a stop in. And the
Correct.
EG indicators are fascinating.
Correct.
Well, thank
Great
you,
point.
Dr. Levy. I really appreciate this. And the great news is we're going to have you back on,
Mhm.
and we're going to have some of your colleagues on, and I think we're going to do little more with some of your other indicators as well, and your colleagues will show us how it on live trading on that day when you come back, and the days you come back, we'll do that again. So I can't wait.
I want to invite everyone to join my Discord. There are free indicators, educational tools that all of you can take advantage. And thank you, Tom, for this opportunity. I enjoyed talking to you.
Thank you very much, Dr. Levy, and we will be right back.
So, you want to be a trader? Well, you should know you're not alone. Over the past several years, record numbers of people have set up their very own online trading accounts. There's never been an easier time or more inexpensive way for do-it-yourselfers to get started trading the financial market.